everyone! For today's video, we will be covering the major events in cryptocurrency market 2022. There is no denying that 2022 has been a challenging year for the overall market. From its peak in 2021, the value of the US stock market has decreased by more than 15%, that of bond market by more than 20%, and that of cryptocurrency market by more than 50%. Global central banks started raising interest rates at the beginning of 2022 in an effort to reduce inflation and slow the pace of economic growth. Investors' demand for risky and speculative investment techniques has significantly declined as a result of the tightening of monetary and fiscal policies. Many investors have chosen to liquidate or completely withdraw from the speculative asset classes. Traditional asset classes has been impacted, while emergent asset classes such as cryptocurrencies has been under a great deal of pressure. Here's an overview of all the major events in the cryptocurrency this year. Number 1. Russia's invasion of Ukraine. Russia's invasion of Ukraine on 24th of February 2022 led to a further increase in inflation caused by the supply side. This further fueled the already sky-high inflation caused by the COVID quarantine easing of 2020. In order to combat this rampant inflation, the world entered into a global tightening macroeconomic environment. Risk assets such as cryptocurrencies are inversely correlated with interest rates and hence tend to perform worse during such times. During this time, Ukraine asked for donations in Bitcoin, Ether, and stablecoin Tether. In total, the country received nearly $100 million in crypto donations from individuals around the world. Number 2. The fall of Terra Luna. The stablecoin USD by Terra Luna, an algorithmic stablecoin, was pegged with the help of their native token Luna. Along with its yield-earning protocol Anchor, which provided yields of 19 to 20% APY, it remained unrivaled in the lending space, boasting a market cap of $41 billion Luna and $18.65 billion USD during its peak. But the Luna ecosystem had a flaw whereby if USD peg could not be defended, both USD and Luna could enter a death spiral. This came into effect when USD started to decrease on May 7, 2022. Over a span of few days, the whole Luna ecosystem collapsed, and this led to drawdown of all cryptocurrencies. Number 3. 3AC. Three Arrows Capital was regarded as one of the best hedge funds in the crypto space. Its reputation was such that companies like Genesis Blockchain and Voyager Digital lent the firm billions of dollars. 3AC took a $600 million hit from Luna. Then, as the crypto market faced a liquidity crunch, lenders started recalling loans. Along with the suppressed crypto prices, GBTC and STETH discounts, 3AC found themselves in a difficult position. The final blow was dealt as their position on FTX was liquidated. Less than a week after being ordered into liquidation by a British Virgin Islands court, crypto hedge fund 3 Arrows Capital filed for Chapter 15 bankruptcy. Number 4. Celsius halts withdrawals. In June, Celsius, one of the largest centralized crypto lenders which managed roughly $12 billion in assets, announced it was pausing all withdrawals due to extreme market conditions. It was revealed that Celsius had invested a large amount of their funds into Lido's liquid staking token, STETH. However, it was less liquid than ETH. As investors anticipated Celsius to liquidate their holdings, STETH started trading at a discount, and this fueled a bank run. Once Celsius halted withdrawals, this contagion spread to all other lending platforms and the market started reacting adversely. This led to liquidity issues for all the other lending institutions and saw several file for bankruptcy. Number 5. The merge. On September 15th, the highly anticipated ETH merge was finally completed. This transitioned ETH from a proof-of-work model to a proof-of-stake model, making it 99.5% more energy efficient. It reduced ETH issuance rate by 18%. This, combined with the ETH burn mechanism from EIP 1559 dependent on network activity, makes ETH deflationary during times of high network usage. In anticipation of the merge, the derivatives market saw deep backwardation for ETH as hedge funds entered risk-free trades to harvest the potential ETH-W airdrops. Post-merge, ETH prices declined as it was more of a buy the rumor, sell the news event. Number 6. The fall of FTX. The collapse of FTX started with a CoinDesk article which reported that trading firm Alameda Research held large amounts of FTX-issued FTT tokens on its balance sheet. FTT is listed on very few exchanges and hence has very low liquidity. Looking at the bid depth, it was clear that if anyone had to liquidate such large amounts of FTT tokens, they could only do so with massive slippages. As FTT's price started dropping, panic ensued about FTX and Alameda's solvency. This led to large withdrawals from FTX. Soon after, FTX filed for bankruptcy. It has since been revealed that FTX misappropriated its clients' funds and had a hole of over $8 billion. The legal proceedings for FTX bankruptcy are still going on. Alameda Research was one of the largest market makers in the crypto space. This has had a direct impact on the already low liquidity environment in crypto. Since the whole FTX Alameda fiasco, Kraken's BTC depth has fallen by 57%, Bitstamps by 32%, Binance's by 25%, and Coinbase's by 18%. Despite the chaos, we are looking forward to step into 2023 with the possibility of healing and a bullish tone. Notably, none of the failures we've witnessed this year were brought on by the breakdown in the underlying blockchain technology. In truth, technical advancements in the area has continued, and this year has been a pivotal period for several blockchains. The successful upgrading of Ethereum from a proof-of-work blockchain to a proof-of-stake blockchain occurred in 2022. Many individuals deem the big changes to Ethereum's tokenomics will be good for the ecosystem's future. Many people have called for more regulations of cryptocurrency as a result of the failures and bankruptcy of 2022. Fraud, theft, reckless lending, and leveraged trading are only a few of the factors that have contributed to this situation. However, a blooming blockchain technology and tenaciously growing DeFi and NFT markets provide developers and builders with limitless evolutionary directions and possibilities. With this, Brilliant Moon wishes all of you a very happy new year ahead.